cuts for you, tax cuts for you, tax cuts for everybody. Let's talk mini budget. As a business accountant, my team and I spent all day long helping business owners on their journey, and that includes, of course, navigating all the announcements, tax rate changes, and everything else that happens over the year. Now, normally we get 1 to 2 events like this, forgetting COVID, that was a crazy situation, but outside of that, you normally have a budget in March, and then you have an autumn statement. We've just had our autumn statement, not that anybody's really calling it that, it's being referred to as the mini budget, or as I think they'd prefer it, the growth plan. So I'm going to give you the small business highlights in this video. So only the stuff that really matters to you. You can go online and I'll stick it in the notes below where you want to find the real detail if you want to go through them all, because there's stuff about stamp duty and all that kind of stuff. I'm not going to cover that. I'm going to cover the stuff that matters to you as a business owner. But before I do that, if you like these type of videos, make sure to click the subscribe button and the bell below so you get notified whenever we release more videos just like this one. So then, how did it go? Well, I sort of alluded to it at the beginning. There's a load of tax cuts, which I think was kind of leaked beforehand. People expected this to happen, but it's a bit of a departure, to say the least, from what the previous sort of guard were doing with the budgets and the policy over the last few years. So just to give you a little bit of history, I think it's fair to say that the Conservative government over the last few years, they were always pro-business, and then it hasn't really felt like it over the last few years. They've been doing a lot of things that actually feel a bit anti-business, actually. And it was interesting, and I think a welcome change to see so many of the tax cuts that have hit, and one massive shocker, which we'll talk about towards the end. So hang on for that, because I'm confused and I'm interested in your opinion. So what happened was we already knew there was going to be an income tax cut in 2024 from the 6th of April 2024. They were going to cut what is known as the basic rate of income tax. So that's for most people who earn under 50 grand, you pay 20% tax over and above your personal allowance each year. So you normally get about 12.5 grand-ish tax free. And then anything between that and about 50k is taxed at 20% for like a normal income from your job or self-employment, stuff like that. You've got national insurance thrown in, but that's it. So this basic rate of income tax is 20%. They said we're going to knock it down to 19, which is the lowest rate it's ever been, and it's the biggest cut for years. What they have done is they've brought that forward. So I think with the cost of living crisis and everything else that's going on, from the 6th of April 2023, so immediately next tax year. So that's great news for everybody. You know, it's everybody's pockets, isn't it? And like everything, it's a percentage, right? So obviously the lower down the earnings scale you are, the less that's going to be that exciting, but a cut's a cut. So that's happening. And again, there will be people in the comments, I'm sure, saying to me, yes, but inflation and frozen allowances and da-da-da. Yeah, I completely understand it, completely get it. But yeah, for now, it feels like a cut, right? At the end of the day, a rate's gone down. So that's happening. On top of that, what we have got, which is massive for the company aspect for limited companies, is you have a corporation tax rate that was due to jump to 25%, which from a lot of people's view, including mine, was crazily high, a little bit anti-business and anti-competitive when you think about the rates surrounding us, which is why so many headquarters, for example, are in Ireland, because their corporation tax rate is a lot cheaper. So I think the thinking is low corporation tax, competitive, drives international business in. Let's leave Brexit to one side for a minute on that, but ultimately that could be the thinking. And that was due to jump to 25%. Now it was staggered, so it depended on your profits, but a lot of small business would end up paying more than 19. I mean, you once you hit more than 50k profit, you were hitting higher rates, then you're into the 20% pluses. And for a lot of small businesses that take their profits in dividends, that was going to be you getting hit by that. So, and that for me in small business world, anything that stops cash coming into the business really does stop growth. So what we've seen is hopefully that percentage drop will then mean that there's more cash available. So yeah, what they've done is they've said, scrap all that, we're going to keep it at 19%. Fantastic decision, really pleased with that. So for all of you out there with small businesses, with limited companies, that's all going to be great news. Now on top of that, and this affects both limited company owners and everyone else, is they've said the health and social care levy, which was this tax year effectively a 1.25% increase in national insurance of all forms and dividend tax, because they knew that the two needed to be a little bit in line with each other, because you don't pay national insurance on dividends, so you've got this separate tax to kind of feel like national insurance. It's not, but it feels like it. So what you have now is they've said, do you know what, we're going to scrap it, just absolute outright scrap it. So if you're paying it now in your pay slips, if you're listening to this and you're employed, you've got a side hustle job or something, you would see you've started to pay this social care levy. That is going to come out from November. So that's going to disappear. But for everyone else, for the dividend tax point of view, it's going to wait till next tax year. So you're still paying over 8% on your dividends in the basic rate right now, or over 33% in the higher rate. But from April next year, that's all going to change and go. So a little bit of a staggered delay, but it probably just makes it easier in a way. That's great news. So again, in business owners, that affects your pockets. Everyone else, that affects your pockets as well. So that's all kind of good news. And if you're an employer, I think it's exceptionally good news, because if you don't know, employers have to pay employers' national insurance on people. It was nearly 14%. It's over 15% with this health and social care levy, which is a cost to the business, nothing you can do about it. So that coming down is really important, especially in a time when you're looking to give your team pay rises and you're thinking, how do I pay for this? You know, I've got to consider my pricing. Can I put my prices up? How does that affect my customers and clients and everything else? So again, it's just welcome. And they're keeping the employer's allowance, which is the amount of tax-free available money you get knocked off your national insurance bill at that increased 5,000 limit. So it's a bit of a double win, really. So good news if you're an employer, I think, as well. So if you take all those things into account, you think, well, there's nothing like bad in there. And I'm more than with you on this, you could definitely argue, is it actually targeting the people that need it and enough at the lower income brackets? I'm not sure. And there's a lot of deeper stuff in that document, which really people have already started to pick apart, saying doesn't really look like it. So that has been an issue. But the one thing that shocked everybody, I'm going to talk about in 2 secs, just pause there, because it is to do with tax cuts and changes. But before that, I want to talk about something that was buried in the document while we're in the document, and that's IR35. Now, if you're a contractor, so let's say you're a stereotypical IT contractor, or anybody in like a professional services market, you might be a HR professional or something, the IR35 rules have been really important for years, and there was a massive change a couple of years ago that basically destroyed the industry. It puts everybody into, you might have heard the term umbrella companies. They're kind of like a payroll company. So you end up on their payroll and they charge the end client and they deduct stuff off you, and it's all messy, it's not particularly tax efficient, and the only people winning out of this really is the umbrella companies, from my point of view at least, and nobody really liked it. What we had a few years ago, so if you were an IT contractor, and you were contracting to an end client over here, you went for an agency. So you charge agency, agency charged customer, customer pays agency, agency pays you. Everybody's happy, and these IR35 rules were there to protect people from basically pseudo-employment. It's so that I couldn't say to my team, right, you're all sacked on a Friday, but come back on a Monday, all as individual limited companies, because it's great for you, great for me. In certain circumstances, that isn't quite true, but from a pure tax perspective, that is the truth, because of various different things I won't go into in this video. What happened, going back a few years ago, is they took the liability off the contractor to decide that. So it used to be you as the person at this end that used to decide if you were a pseudo employee or not, basically. And if you said you weren't and the revenue caught you and said you were, you got to pay the tax. But what they did was they moved it up here. And as you imagine, the potential liability for those big companies was too much. So they said, no. Everybody's now within IR35 from our point of view, and there you go, and it basically killed the industry. All the limited companies disappeared and everything else around it. What they're saying is, we're going to take it back to the previous position, and we're going to take the reliability and the risk and the decision off of the big guys and put it back on you as the contractor. Amazing. Let's hope that's the case. It's still not the best piece of law. I mean, there's books behind me that go back many years talking about the different arguments about it, and it's still not a great piece of law, but it's a very difficult landscape in the employment/tax law at the minute. So I don't envy them in trying to figure out the best way around it. But for now, that is a really pro-business move, and I could do a whole separate video on that. I'm sure maybe I will. So that's really, really good. Now, let's get on to the shocker then. So that's all, relatively good, right? The shocker was that there's 3 rates of income tax really in the UK. You got 20, then you got 40. I should say, sorry, in England, because in Scotland it's slightly different. But in England, you've got 20% basic, 40% higher rate, and then a 45% additional rate. And that's when you earn over 150k. Anything over those is 45%. Now, nobody's been campaigning for this to come down. If you're in that bracket, it's obviously a pain, right? It's a lot of money. But when it was 50%, people used to really get upset, and it actually forced a lot of people into tax avoidance schemes and all these crazy things that many people got caught for later down the line, 10 years in some cases. So it wasn't great, and people had issues. At 45%, that's historically quite low. I mean, back in war times, it was in the 90 plus, right? So it's been quite low. But what they've done is they've said, we're going to axe that down to 40. We're just deleting the rate straight out. So all those higher earners are now on 40%. Now, I've got plenty of clients in that bracket. They're going to be very happy, right? So if you're in that bracket, congrats, I'm happy for you. At the end of the day, it's not your decision. It's been made for you. You're going to benefit. That's brilliant news. So again, you're going to be happy. The thing that's confusing me logically, and I think is confusing many people, many commentators around this, is, well, how does it fit? It's not a very good read of the room is the best way I can describe it. Because if we're saying, look, everybody's struggling with cost of living, but here's some small handouts, and then we're going to cut it 5%, which is quite a lot of money on those kind of incomes, to people that arguably arguably, and I've seen many people's books in this case, so it is arguably don't need those handouts, then it's an interesting policy. And on top of that, we're saying we're borrowing money to fund these lower cuts, and we're borrowing money to fund this cut. And for those of you who haven't seen the stats, the majority of the tax in the UK is paid by the top percent, right? Just because, as you imagine, it's a percentage. If they're earning loads of money, they're going to, by maths, pay more of the tax. So you've now cut one of your biggest income revenue generators. So really confused by that, totally shocked. I think everybody in the office was like, okay, where did that come from? And you can see in the media over, literally as we're recording this, only a day in, and everyone's hammering in on that. So really interesting, lots of tinfoil hats coming out about, Tory donors and all this kind of stuff. But regardless, that's where we are. If you're in that bracket, congrats, it's gone down, and there are benefits there. But yeah, just on a policy point of view, came very much out of nowhere, and nobody really expected it. So that's where we are. That's the most shocking change. So that's kind of the key highlights. As I say, you can argue about whether it's actually helping the people that need it, but I will say from a business growth point of view, I do think it's pro-business finally, and I do think that they'll be looking at the owners in the world we live in. Remember, employers, small businesses are the majority of the employers in the UK. Like, it's a really big deal to have some more cash in the business to do it. I know some people were saying about, well, could we cut VAT in that? But actually, seeing what we see every day, I don't think that has as much impact as cutting some of the things that have been cut. So there is some really good stuff in there, but obviously the arguments continue around whether it's actually helping the right people. So there we go. That's the small business highlights. Please let me know in the comments below what you think and where you are on this, because it's an interesting debate, I think, to get involved with and talk about. So there we have it. Please do share this information with anybody that needs to know, and I'll see you in the next one.